Hey, good morning, everybody. How you all doing? We got a new year, lots of bullish tendencies. It's risk on everywhere. There he is. Speaking of risk on, what's up,
Oh,
Lance?
I'm always risky. Kramer came out and
Kramer.
said he's now bullish. He said there's starting to be bullish tendencies on the market. So I don't want to jinx you, Jeff, but
Oh, I don't care. I think it might switch. I think it might switch like a light switch here during earnings season, but that's a different story. We'll get to that. I was
the
saying that it's just like it's incredible how the light switch went off when we all of a sudden we're back to risk on. He also said that he would dump all his Bitcoin at 15,000, and it's done nothing but a straight face ripper since then.
well, yeah. He also said he closed his Facebook position at like a hundo, and then it went up. What is Facebook? Now up 20% or so from there.
Dude,
He's the best. He's the best trader alive. Best salesman. Best character on CNBC. But
well, he's on
my
TV all
God.
day. He's on TV all day long, which is
He, he's like the people.
But that's okay, right? But that's okay. They like that. That's acceptable.
Hey, he's telling you his best stocks to buy at the highs and his best stocks to sell at the lows. So if you do the opposite,
That's because he's from government Sachs, Lance.
that's true. That's true. Just like every Fed chairman.
Yep. So what's up? How was the weekend? You had a long weekend. We have a Tuesday here to start the week. We usually do the show on a Monday.
Very weird, right? I'm trying to switch. If maybe Sean, if you could send me the link, I'm trying to switch on my laptop so I have a big overview. But Dr. Martin Luther King yesterday, very one of my favorite holidays. I know a lot of people had off work, maybe had a parade. One of the best men in the world, we'll say. And markets, futures moved a little, but it's very, very light, right?
Very little.
Very light this morning. Very light news. Really,
a lot of people don't know that the SPOOs are actually open for a period of time overnight because the Europeans, they don't recognize Martin Luther King Jr. Day. They should, but they don't.
No.
And the futures stay open. So we had an S&P session that closed at 11 o'clock East Coast time yesterday. And it was
very
a little
light
bit down.
volume, obviously.
Yeah, just European bankers trading, etc.
Oh yeah, I can't get on my Zoom on my laptop. All right. Well, sorry, gang. I can't see the chat. I'm on my phone, but
I'll relay stuff to you. I'm going to share the screen here,
thank you.
If you don't mind.
But Jeff, one thing that it does kick off this week is earnings with Netflix. The boring banks, Goldman Sachs out, whatever, who cares? But we do have some names.
Yeah, we'll get to that. We're going to try to find something good to do, right? We always wanted to try to find something to do. I think we kind of work our way into that. Like we get into the
you're saying we gotta little romance them up, a little touch and kiss before we get into the big old earnings moves.
Well, in lieu of economic prognosis, maybe we can entertain them a little bit and look at some some bigger term charts that matter and see if there's any money to be made off of those, rather than just like trying to figure out what inflation is or isn't doing. I'm done with that. I'm done with that combo, I think, for the rest of my life. But this chart I'm showing you guys right here, this is Bitcoin. Look at this thing, back from the dead, like Lazarus, straight above all the moving averages.
Dude. You see the Bitcoin stocks this morning too?
Yeah, all of them.
They're squeezing their tails off.
I don't think this is a one-off move. I don't
either.
I don't think so. That's what I'm trying to show people here.
All the bad players are out. What are we at now? 21 plus, right? All the bad players are out. And there's so much negative news, and so many people, sold their crypto after the whole SBF thing, that you had growth stocks rally, so risk was on. And where is risk going to come back on the most? The damn crypto.
Well, crypto is a sign that risk on is still alive and good. And this is the thing. a lot of people that don't know about, a lot of these things, when this Sam Bankman criminal guy went down with his Ponzi scheme, and they put everything in the same kettle of fish, but it is not the same kettle of fish. This dude took people's deposits. He had 1 million customers, Lance, FTX. They had 1 million customers that he dipped out of their piggy bank and put it, into his bullshit. But they put it all together and they say, well, Bitcoin is that. Bitcoin is not that. Bitcoin is not that. It's that was a separate thing. That's like saying all stocks are, penny stock pump and dumps. They're not all, right? That was one aspect of it. This is a different, but this shows you that there's still an appetite for more risk, in my opinion.
Dude, I would say this is one of the healthiest things. Not only if Bitcoin can hold, let's say 20K, but even when it was holding like 16, 17, that was a very healthy sign.
Yeah, because it was all bad news. Right.
Right. You can look at every economic factor, GDP, PMI, CSI, chicken wing, FI, whatever, FHA. You could look at all these different economic news and numbers, right? And all these nerds will to try to project what's next for the Dow. But none of that matters. But when you did have crypto holding and now rallying, that is one of the most healthy things for the market, because you're not going to see crypto hold 20K and the Nasdaq drop another 20%. It's not going to happen, And what would be the most bullish case scenario is if Bitcoin falls, let's say back to 16 or 15, all the damn cryptos fall, and the stock market, especially the Nasdaq, holds where it's at.
Can you see the graph that I pulled up, or no? You don't have like
I see it now. Are you doing a Nasdaq?
The Nasdaq is the blue line here, and this is Bitcoin's price. And it's because it's not logarithmic, so it's hard to see. But you can see that Bitcoin is leading. It's leading all these moves beforehand, before what the stock market's doing. It's doing it before the stock market. So Bitcoin started to rip, stock started to rip, Bitcoin collapsed, then the stock market collapsed. Right? So this is a good sign. That's a good sign. You need it to, like you said, if it stays north of 20,000, even if like, periodic like software earnings, et cetera, are coming out and they're bad, I think
they're going to get bid up. They're going to get bought up.
I think you could be in a little bit of buy the dip. I think you could be trading the BTFD style a little bit in earnings would be my point of view. Whereas you couldn't do that last year. I think that might be a little bit different this year.
No, you were having the growth stocks sell off on earnings, but not just sell off, get crushed because there was no risk for appetite. Now, let's say you get AFRM or apps or DraftKings or Penn or PayPal or Square. Let's say they go down like 10% on earnings. Don't be shocked if these names rally and go green by the end of the day if crypto's holding and that risk appetite is on, because they will take advantage of anything that's down and move higher. So you have to be careful when you're buying puts. So like, for example, if you ever bought puts in a stock and then before earnings and it gapped down on earnings and you're like counting your money like, wow, I'm going to crush it because, I bought puts and the stock's down a lot. And then 5 minutes after the open, the stock starts ripping straight up. That, in my opinion, is what you could see. So it's going to make it very, very hard to buy puts on these growth stocks for earnings, even though people think, they're pieces of shit because they have been. That is going to be very, very difficult. So from a risk versus reward point of view, you could be right and stocks move lower, but you're not going to make money on your puts because also implied volatility is going to be high. I think the opportunity where it's at is you buy cheap out the money calls on some of these stocks ahead of earnings and see if they squeeze their ass off if you get a continuation move and risk appetite for growth.
It's like the market's telling you, we don't believe you on the down moves. So that's what you're saying, like, to be really clear, like you'll have a down, like you're saying, like you'll have a down move in the stock, which is temporary. And then the options won't move like you think they should move. But the options are correct in that spot, because then the stock will start to squeeze back up and be where it should be. Different case in the stocks, right? You'll have on the long side, you'll have a stock report some bad news, stock sells off. Let's look at Goldman. So Goldman, and I know you don't trade financials, but this is like an education moment, right? So Goldman Sachs if we look at, hold on a second. Yeah. If we look at GS, they didn't have good earnings this morning, right?
No.
Stock's down, not a lot, I guess like 3% or whatever, which is not a lot. The stock's not down a lot this morning.
What was the implied move? Probably, 6-7%.
Yeah, if we look at Goldman,
I'm sure the implied. JP Morgan's notorious for this. They always move lower on earnings initial, and then they rally green.
Well, that's what I'm trying to say. Like, this is not going to be a big move one way or the other for the options market, if I'm being like very, very concise with this thing, right? So if we look at the estimates here, and they missed, dude. And that's another thing. They really bombed. Like, they were 41% below what they were supposed to make. But look at this is why if people want to know why Lance is always bad mouthing financial stocks and people that talk about financial stocks, the average implied one-day move 2.4%. This is a stock. This is a type of move that Lance wouldn't trade on a non-news day. It's too low. It's too low an implied vol move. So, and that's with earnings. That's with earnings.
Iron or some crap where you're risking $80 to make $20. There's no reason you should be trading like banks or food stocks or these stocks that do nothing. Like, if you want to invest in them, have whatever tea you want to drink.
Let's have a big disclaimer moment right now. We love this, like, people love disclaimers in our community. We are not investment advisors. We do not talk about investing. We talk about trading. We are giving you trades. We are giving you trades to do. Short-term trades, swing trades, overnight trades, options trades. We are not talking to you. When Lance and I are talking to you, and we can only speak for ourselves because there's other people here that think that they're, communicating investment ideas. We're not. I'm not.
No.
Never.
Like, when we say banks are boring, it's not that they're bad stocks.
Right.
They don't move. Or when I say shit stock, like if I say Lucid or Snap is a shit stock, I don't know if they technically are from a fundamental point of view. I just know they're stocks that they're going to squeeze when the market goes up.
Man, right? There's nothing wrong with having something in your I'm not an investment advisor. I got to do this disclaimer, but if you're buying like the PFF, which is preferred shares, and it's got a bunch of banks and it's spitting out a big dividend to you or something, power to you. God bless you. But that's not what we're talking about here. That's not what this is about.
We're trying to that can move. Like, we're already on earnings. You might as well go to the big dog, Netflix.
Let's look at Netflix.
What I'm gonna say right now that the implied move is I'm not even gonna look at the options. Just type in Netflix. I'm not even gonna look at the options here. I'm gonna say the implied move on Netflix, and this is without me looking at the option chain or anything.
Yeah.
I'm gonna say the implied move is around $35.
A little less. So it's 8.6%. I guess $35 would be north of 10% here at $330 a share. A little less, but
that's actually decently
not far off though. Better move than GS. So let's do let's back out like we always like to do. So
it's a gapper.
Sorry?
It's a gapper, which I love.
It's a gapper. It's exactly right. It's a gapper. But if we let's look at earnings history. I always like to look at this.
Yeah.
Let's see what it's done on one-day moves. So it beat by 45% last quarter.
Look at that move.
And the stock moved 13%.
Oh, that's beautiful.
This is one trading day. You had a 35% move though, just 3 quarters ago. You had a 22% negative move on the same time last year on reporting Q4. Just to keep that in mind. Keep that in mind. You had a 22%, and they beat, and they went down 22%. But we were in a bear market. We were in a bear market then. We're not quite as bearish right now. But still, these are the kind of moves you can get in this thing.
I will say this. If you think an 8% move, now you know why that 8% move is just cheap. Which I think is high. I was anticipating a little over 10% move.
I think 8% is cheap is my deduction after looking at these last 4 quarters.
Right. So you're going to have people in the chat say, well, should I buy straddles? Well, look at Rado made 800% last year on Netflix. That was like Netflix puts, right?
Yeah.
Let's look at the straddle, because you might be saying, well, vol is cheap. Let me buy a straddle. I would say no, because look how much you're going to spend on a straddle. You might as well just get directional with in my opinion, a cheap out the money option, or call spread if you're bullish, a bear put spread, debit if you're bearish. But when you buy straddles, it's just
what month you want to look at? You want to look at this week or
the
week? Okay. 30. So it's $330 stock. You're $33 for a straddle.
That's a lot of money, especially you have, like, let's say a $10,000 account. You're risking basically a 30-year account, right? Which I would hell no, do not ever do that, right?
No, that's because it's pricing in a 10% move, right? You're paying 10% basically for this move. I don't know. Let's just look at single directional bets.
It should be about $15.
So if we go to, let's look at the so it's at 330.
Look at the 350s.
Yeah, that's what I was thinking. 350s are still $10, dude.
So you basically need the stock to print 360 to make barely anything.
Yeah.
That's not good. What are the 360 calls? Like $5?
6.7.
So you basically, the stock prints 370, double your money.
The stock has to trade 20%. It's got to trade up $60 from here. It's got to trade like 370 to 390 on a bull move. It's got to trade back down to like 275 on a put move.
That's still a lot.
Puts are cheaper. Puts are cheaper.
If I was trading it, I would actually probably do something like a call spread where you risk $1 to make $3, or since they're $2.50 wide.
Yeah.
Or like a $5 wide call spread where maybe you risk $2 to make $5, or $1.50 to make $5. Or if I was doing a put spread, something to the downside, I would do something cheap, unless something happens between now and Thursday that sticks out before the earnings report. Because it has been one of the most bullish names despite the market, pullback.
Yeah, let's look at the chart. Let's look at the chart. The chart's going to tell us no lies. It'll give us a pretty good indication here.
Yeah.
Let's look at the long-term chart here. The daily chart. It gapped in April, right? What did it close in April? It closed at 348.61. So that's another thing. Whenever you have a gap, even if it takes you half a year to fill a gap, there's a community of traders. They're not traders, they're investors. There's a community of investors from last April that are just like earmarked $350 as a place that they would get whole. They would sell they would just dump all their stock if they could just get back to breaking even. Because people don't think in terms of like, okay, I'm down 2%, I made 20%, I'm down 3%. They think I need to win, I need to break even. So there's a community of people here that will act kind of as a bit of a resistance at this level. There's another community of people up here from last year, 500. Now that's that's not even close to reality, but same mentality.
But you're going to have those people. So that where that gap is, that big earnings gap to the downside, what was it? 360?
348 is the close that day. And then it opened the next day at $245 a share.
So you're going to have those people at 348.
Yeah.
Right. Who, if Netflix goes up, so let's say it rallies to say 360,
they'll drive it down. Yeah.
Yeah. And it's more of an emotional thing. You have to where people bought and where people sold. So a lot of times we look at the chart of what's happening today. You have to take an outside perspective, right? It's like when you're playing poker. If someone has kings and you have 2 aces and he has 2 kings, you can get all this money, right? You get all his chips. Don't look at it from your point of view. Look at it from the outside. Look at where everyone else is long or short. And then
I've got a good poker saying. So beginning pokers look at their cards or think about their cards. The next level of poker players, intermediate, think about what the other people might be holding. And then poker really starts when you start thinking about what people think about what you have. Right? Think about that. Your perception, their perception of you. And so, like, this basic thing that Lance just described and that we've been talking about is level 2. Like, understanding where they're at with their cards, where they're living at, where they're sellers, where they're organically buyers. And gap levels are always places where, you know, that community needs to be made whole. They'll sell it back down at 348 by the close that day. If it opens and gaps at 365, I would probably buy a put at like 355, thinking I can make $7 on it by the week, you know, just because of the way people think and how they operate.
And think about it from your perspective. If you bought it and let's say you're down, let's say 10 grand, and now you're break even, you're going to be the happiest person alive.
That's what I'm saying. They've been sitting here since last April waiting for that moment to break even on the stock.
Right. You're gonna have a huge weight off your shoulder, and you'll say, man, I'll never touch that stock again.
See, it's so weird because I don't like, you know, I guess I've traded so much in my life that I don't think that way at all. I think much more in terms of like, how long am I willing to hold this? How much can I make in that period of time? I never think about like, can I get back to break even on the P&L on this one play? Never makes a difference to me. I'm happy to take a loser. Doesn't matter.
It's an ego thing, and people want to be right more than anything, especially guys. Like, for example, you know, there's a lot of trade services out there that are like 9 out of the last 10 have been winners, but they're like 5% winners, and then your losers like 80%, wiping out all your winners. Like, that's the stupidest way of looking.
I hate those kind of strategies, dude. I hate those kind of strategies. Those are the worst strategy for me, for my style, and for my mentality. I'd much rather tread water until I get to my next big hit than make tiny hits until I get to my next body blow, if that makes any sense.
Yeah, it's not a way of looking. You know, the people who have that mentality, when it comes to market dynamics, that's just the wrong way to look at things.
Well, we used to have traders on the prop trading desk that would come in with those kind of strategies, and they'd get fired invariably, like really quick. And we'd be like, oh, this mofo is just picking up pennies in front of a freight train. Invariably, the freight train comes through, and then everybody's just like, see, that wasn't sustainable. And it was never enough money for the risk ever. It's almost like matching what the risk-free rate on money is at that point in time. It's the stupidity of it, because that's what market makers will assign as the spread. That's how they price spreads.
Yeah, unless you're George Santos, who was a 25% IRR to his investors and the Ponzi scheme thing. Did you see that? He was like, I'm averaging 25.
He's George Santos. I got stuck on the fact that he was like captain of the volleyball team at Baruch College. I got stuck on the Baruch volleyball team story, but
I don't know why, but I can't get enough of that guy. The way he talks. And it's like, and they defend him too. Like, yeah, I got arrested in Brazil. I was married, and now I'm married to a guy now. Like, he went from 50 G's a year to like what, so many million, because he said business picked up.
I think he's got to go. Just a personal.
He has. I mean, he should be like, you know, they banned like Andrew Tate and all these people, you know, like the influencers. They should just from like everything. Like, that's like the funniest thing I've ever seen, and how that's getting away nowadays is just unreal. Go ahead. Despite what, if you're to the right, you have to admit that's the funniest story. This
guy's got to go. Everybody knows which way I lean. He's got to go. Like, dude, you lied about everything. See you later. You can't lie about everything. Come on, get out of here.
Well, he has.
I know. The volleyball is the stupidest one, which is why I love it so much. We've got United Airlines, I think, is reporting this week. Airlines moved too. That might be something.
Yeah, they already moved.
But they've been ripping. And they Delta had bad earnings, right? Delta was the first one to report. And they had bad earnings, but they didn't take down the whole sector because people still love them. Look at this chart though, bro. Look at this thing.
Delta, UAL. You know what added fuel to the fire was Pull Up Love, LUV, Southwest.
I know, because they just stopped doing their damn jobs. They didn't even do They didn't live up to their end of the arrangement.
Yeah, so everyone was bearish, obviously, on it, like, buying stock, and that just go to the fire of the squeeze in airliners.
Right.
That's what we say. Fundamentals don't matter. Like all that fundamental stuff. Like 90% of people would think, oh, that's so bad. Their company's so corrupt. The flight outage, it's going to be so bearish for the stock. All that just lighted fuel for the stock to go up and the whole sector to rally.
But I just like being a contrarian, and this stock is back to like a triple high in the 50s since 2021. I don't know. I'm gonna look at this thing for a second here.
Cruise liners, casinos, you name it, all the travel.
Yeah, I mean, casinos a little bit better because they are like the Chinese gamble like hell, and now they're not like welded into their houses, so that might be pretty good. But look at this. This has only got a 3.8% implied move, UAL, and the stock has moved 30% in a month, and they're only expecting this tiny ass move. So that's kind of interesting. Whenever you have like the market that is totally, I'm not going to say like they're not accounting for the possibility of anything crazy happening. I like that because something crazy could happen, right? Look, they had a 10% move 2 quarters ago, a 9% move. Those are triple the moves that are expected in UAL.
But though, the stock has already moved 30%. So how much more juice does it have left to squeeze?
I think you might be able to buy some out of the money puts and hit a home run, possibly, is what I'm trying to say.
I would say the downside way more to the upside because you already have a big.
This was a $37 stock in early December, is what I'm trying to say to you. You could buy you could buy puts by the end of the week, a $50 put. I think I'm going to. Okay. I think we've come across what we might be doing, or I might be doing anyways. So it's been a pretty good session here. It's been a pretty good session, Lance. I think we're done. We got a couple of minutes left. Just want to say thank you guys for watching this with us. We're going to do a lot more of this type of stuff. We might have some pop-ups during earnings season. It's we're kicking off earnings week, but it's a little bit of the more boring week. I think next week we'll have more fun stuff to do. So we might have a pop-up here and there. Watch your Telegram. We might have a 3 o'clock thing where we get together for 15 minutes if something cool happens. So we want you to be there. And that's what I got.
Yeah, watch out, guys. Hopefully we'll be off Zoom soon. I know by the way, and I have a new email. If you guys, a personal email, just don't do any account stuff or money stuff or anything. I don't follow or have any of that stuff. But I have a new email. It's called tradelancetrade@gmail.com. If you have any,
you want to put it in the chat? Type it.
If you can, I don't have the chat.
Oh, you don't have the chat. What's it called? What is it again?
tradelancetrade@gmail.com. Just tradelancetrade@gmail.com. I am looking for like a content manager, brand manager. If anyone knows any maybe has any kids or
Let's go. Yeah.
College, something like that. I'm just trying to basically, God, that Spoos just went green. Holy crap. Trying to get this so we could have a more official show and basically stuff like that. So just a little heads up there. I can't believe the Spoos is ripping here.
All right, time to bounce. I appreciate y'all. We'll be back with some pop-ups, and we'll be here next week for another Crush Your Open. Have a great week, guys. This is where you're going to see us. I might not be on all these other shows that we have or have had. So this is where you're going to see me anyways.
Exclusive. And keep it up. And look for a pop-up. If the week goes good and busy, we will look to do more shows and stuff like that. All right. Peace.
Later.